All right. Good morning, everybody. Welcome to another Engineering the Markets. My name is Jared, and it is December 7th, 2022. Happy Wednesday. And we're going to quickly look through some of the market conditions for this week. Most of it has been mentioned or just kind of emphasized, especially on Monday, due to the fact that we're seeing a relatively large breach of the expected move. And because that is a downside move, I think the sell pressure is starting to really exacerbate itself throughout the marketplace. We are seeing certain assets fall a little bit more precipitously than others. There's been a large sell swing in financial and energy stocks, along with the continued pressure of some of our larger market cap names for the S&P. The correlation coefficient is starting to really show itself session over session. And what this simply means is during periods of decline and periods of advance, oftentimes you want to see the market breadth that's driving that particular trend or directional bias, along with understanding where the selling pressure is coming from, usually in the form of relative strength and relative weakness, to find opportunity. You often want to be shorting weak stocks whenever the market is weak. You want to be buying strong stocks when the market is strong. And some of the divergent bounces and pullbacks offer continuation and decline if you're targeting a relatively strong stock on a weak session. So this marketplace is showing that characteristic, and part of it is due to what tends to happen whenever you get into volatility repricing. Usually, especially when you're starting to break expected move, the volatility premium starts to increase. Usually this is simply because volatility futures are used as a component of hedging behavior. And if assets that are not necessarily being sold, but more or less are being repriced, start to fall and fall quickly, certain market making firms will be hedging some of that risk using vol futures. And oftentimes, if things are dynamically hedged, they'll just sell ES futures to remove some of their exposure to Vega. This is more of an option related concept, but essentially market makers are always buying and selling the contracts to other traders. They're the ones taking on the positive and negative delta exposure that a trader otherwise is trying to target. And for the most part, they reduce that risk through market future hedging, ES contracts being bought and sold. And then to reduce their Vega exposure, they might just go out to the vol future contracts and purchase or manage an inventory of volatility contracts. So it's a delicate dance that the market makers have to do because they are required by certain rules that their portfolio has to remain essentially neutral. And that's true for both directional bias and for volatility bias. So that helps explain some of the behavior that you might be seeing on the S&P, especially on the intraday basis. Usually traders are astounded and sometimes a little awestruck at the downside potential during some of these sell swings. They try to explain it away through catalyst or some other bias that they might have about the economy. But in the short term, especially through price, and especially when you have sessions like we've had recently, a lot of this downside behavior can be somewhat explained by the hedging nature of market making participants. So, the technical structure is that we are leaning lower than our previous trading range that we were in for the past couple of weeks before we saw our breakout. And as we are kind of approaching some of the deepest lows of that region, we are looking to see if there is a stabilization in price. But for now, we're kind of monitoring these sell swings, making sure we're not stepping in too early for things like bounces and some of the counter rallies that are, once again, quite powerful. You'll kind of notice some of the recoveries take place in the afternoon, right as the market's about to close. This is kind of our biggest bounce opportunity we've had over the past 2 sessions. So keep all this in mind. You know, the market making hedging is a component of how the markets move. It's also just a dynamic system. It's not biased in any way except to keep a portfolio in a certain alignment to positive and negative delta. So, you know, at the end of the day, prices move because they have to move. Markets have to unwind or reduce risk, and they do it in whatever system they define necessary. So we can quantify this, especially on the week, through our expected move. As you notice, we are 2 times outside of the expected move, and it's only Tuesday. This is something that was mentioned early this week. We had a very small expected move relative to some of the volatility we've been experiencing. It didn't quite make sense why it was so low in this particular week, except for the fact that the market was rallying the entire time. And now we're starting to see that change, that turnaround, or that cycle start to rear its ugly head once again. More specifically, if you look at the SPX move for the rest of the week, this is what starts to happen as the markets breach expected move. Remember that the market priced $66 of movement on Monday. It said plus or minus from the close on Friday. As of today, we're still pricing 66 points. So the only way that's possible, because there's 2 less days for the market to move, is that this percentage had to go up. And to prove that, if you remember this 2635, you can review on a tool that allows you to kind of look back in a couple of sessions. And I'll go back to Sunday when the market was closed and when we gathered this data. Once my platform responds, and you can look at the implied volatility. So obviously, there's been a significant increase in the implied volatility to not only remain within the same expected move boundary with less time, but also to explain some of the price movement that we're seeing. The actual volatility this week is significantly higher, and therefore the option market has to change how it does its premium calculation, or essentially reprice the options. This is how implied volatility works. And this is a dynamic that can be seen both actively along with sort of this static view where we're just monitoring the change over time. This is Monday as the market's opening. You can see we're starting to increase. That's when we were starting to see a little bit of downside. And then, of course, yesterday, as things were kind of ramping up in the market, this number jumped up as well, up to about 24. And now we're sitting at about 26 implied volatility. This is just for the Friday series, but it's also percolating itself throughout the entire option chain. So, couple of things for trying to think. There's 2 topics I want to cover. I can save one for tomorrow. I think I'm going to cover the larger topic here. So I have a little bit more time to do so today. There has been a focus on certain asset classes during this advancement, and it is not necessarily just inside of equities. So first things first, let's review how far the S&P has come from this channel low. If we're marking from the bottom and at the peak, the S&P made approximately a 17 to 18% advance. So as long as you were net bullish during this time, most assets have been enjoying some of this rally. There have been some that have made fresh lows, and there's some weakness out there. But for the most part, a lot of equities have been correlated back to the upside and experiencing some sort of bounce across their sell swing. We're measuring off of today and just using that same low, we're looking at about 12 to 13%. So we've given back, from the peak high about 5% of the advance. Not massively significant, but notable. It's a short opportunity. A lot of people stepped in at this trend line, just kind of took the shot. It's the right level. It's the right moment to be bearish. And so far, they're in a good location, especially now that we're starting to breach trend. If we're looking at a bond market product, and this is not necessarily specific to TLT, it's just one of the more liquid and often reviewed bond products because it does track the long end of treasuries, so the actual bonds versus something like the notes. I could just as easily go to like /ZB to make this evaluation. But if we're looking at when did the bond market bottom out, it took a couple of weeks, or it took about an extra week to find that low. Essentially, the equities had bottomed out off of a CPI print. The bond market bottomed out as the equities were breaking out, essentially changing their trend. But this particular rally in the bond market has been significant as well. It's about 10% from low to high if you're reviewing the 30-year. And more interestingly, if you're looking at TLT, from low to high, this product is up 17%. So what's interesting about that? Well, for one, bonds and equities have enjoyed or experienced the same low to high percentage rally. Additionally, bonds are lagging equities as far as the timing of when does their low form and potentially when are they starting to top out, at least in the short term. One thing that might become a realization over the next week or so, I'd be looking to scout some sort of weekly lower high in TLT to essentially align with the equities market starting to also, at least for now, exhaust. Does it make sense from a technical level? Yes, it does. We're actually starting to see our previous cycle low be tested. So this is a back test after a decline. This would essentially be support turned resistance. And it's, of course, a multi-month chart here to kind of find those highs and lows. But bringing us back to the percentage upside that has been experienced in something like TLT, or even on the 7 to 10 year, this is not just specific to one. I'm always trying to delineate like bonds and notes from each other, but the medium end, that's not really the right wording, but basically the middle tier, treasury notes, up about 6.8%, so not as significant. And what's starting to happen here is that the bond rally, the long end of treasuries, has rallied more significantly, which makes rates on the long end, and this is just the 10-year, there's also a significant drawdown in the 20-year and 30-year, these drawdowns have been much larger than the middle tier. I need to figure out how to say that correctly, but basically this correction in rates has been significant, about 19-20% for 10-year, and we're looking at a 30-year now. This peaked out in late August, and we're already down approximately, just trying to get these percentages here, about 20%. So it's notable extensions. It's percentages that matter for the marketplace. What's interesting about this is this aligns with some of the economic conditions and some market theory about how certain assets work during different periods of the economic cycle. For those unfamiliar, usually we're going to have periods of economic growth. Usually people call this expansion, and oftentimes, like most cycles, you have expansion, where if you're charting the economic growth, it is rising. Every single quarter or month over month, you're getting continual increase in that growth metric. You often hit a peak, and usually that's where things are as saturated as possible. Economic growth can only go so far. There can only be so much output from your economy. And at a certain point, that becomes frothy. And usually that's when things are topping out. You often decline from that point, and it's just a small period of contraction. But that contraction, depending on the forces that lead to it, can often lead to troughs or contractionary cycles where growth is actually slowing, going negative, and then once again cycling to a low, and that's your peak and trough of a full economic cycle, at which point things often start to reflect once again. We often have very cyclical moves in the economy. For the very simple view of that, a lot of simple, what's it called? Just images. I'm just trying to grab a quick one right here. A lot of simple images will show this through something like this. And all we're really referring to here is this is economic growth. It's a business cycle, but it matches the economic cycle pretty much one-to-one. You get a peak of some type, usually full saturation across your economy. Recession, which sounds bad, but really it's just slowing of the economic growth. Depression, when things are actually negative and oftentimes still slowing, but the forces are impacting the individual inside the economy. Anything like higher unemployment rates and business slowdown, which leads to just harder times for that economy. And then the worst of the worst, usually the trough, when things are as bad as possible, and therefore the recovery is kind of the only next logical step. So these cycles happen in the economy, they happen throughout businesses, but more specifically, they often happen in the marketplace. And like this business cycle, there are opportunities in how certain assets perform during those periods. What we're noticing with the bond market, and to model a type of business cycle stage representation, there is a management firm by, I believe his name is Martin Pring, sorry. But his firm, and probably owned by others, Pring Turner management firm, they have basically explained and derived some of this through their view of how the business cycles correspond and, in our sense, kind of correlate to how certain assets perform. What you'll notice, and we've been through probably at the very least 2, if not 3 of these stages over the past couple of years, is we're starting to feel and sense what sort of stages we're in based on how these assets perform. What you'll notice is if we can assume that this is accurate, and if we can model something like our S&P, and this is a multi-year review, so you shouldn't be using short-term charts or anything like that. Weekly to monthly would be a more ideal scenario. But what you'll notice is there are periods where economic expansion and economic growth can be deemed as relatively high, but that's often not the time to be buying certain assets. In fact, it's the kind of counter argument in a lot of ways that during some of the strongest economic periods, it's actually the time to be selling. Specifically with equities, this is often when the stock market starts to enter into early bear market stages, when things look and feel the best in the economy. This breakdown actually goes into a little bit more of a modular approach, and even talks about things like inflation sensitive products. And this is mostly referred to as things like commodities. Not necessarily all commodities, not necessarily some of the ones that do have sort of a late stage impact, like oil and gas often are laggards in regards to when those are experiencing their late stage bull cycle, but they are typically topping out around this period as well. So based on this approach, we can start to get a sense of what stages have we left, where are we on this chart, and are we seeing the assets move relative to how they should perform if we are within a particular stage. Now, the one thing I'm finding interesting here is that this is not necessarily saying that everything else is going to be badly performing, and the only thing that's going to be good, let's say in stage 1, is bonds. This is not really saying that. This is saying more so that the downside in, let's say, equities or stocks might not be over. It basically means that bonds during stage 1 could outperform the asset market or the equity asset market. And while this is a short-term view, what we just looked at was just a couple of months of performance. We do have a period right now where bonds are outperforming the S&P. If I am marking from the same time frames, and I didn't necessarily grab the same date for each of those, but if I do anchor the S&P to the same date where the bond market bottomed, for now, those moves and the risk allocation, portfolio allocation performance that investors expect is starting to become more and more realized if we are to assume that we're in something like stage 1. And what you'll notice here is oftentimes, this is something that Artie, our kind of residential macro analysis guru, and to some degree one of our busiest members, he talks about this very often. You often want to anticipate stages. If you are looking at a sector that you believe is going to outperform, you don't necessarily buy it when it is already rallying multiple percentages. You try and buy it ahead of the stage, the cycle, the participation event where it's going to perform. And all you're doing is getting good risk to reward relative to participating in that stage. Additionally, if we look at our economic condition right now, a lot of people would agree that we're not necessarily in an expansionary phase, but there is a lot of self-reflection as to whether or not this contractionary phase is going to be long-lasting. How deep do we have to go? And are we closer to the beginning of our contractionary stage, or are we somewhere close to a bottom? This is kind of the constant back and forth in the investor slash portfolio manager's mindset of where should I be allocated? How much of my portfolio should be cash versus bond products versus stock products? When should I be buying? And then what should I be buying? More specifically, as you see contraction lead to expansion, this is inflation sensitive products. That can include commodities, but it can also include tech and growth. Because if something is sensitive to inflation, the changes in something like risk-free rates and our bond rates are going to often impact those particular assets. So usually bull markets in certain equities actually correspond to bull markets in something like commodity sectors. Even though that might seem counterintuitive, tech is often interpreted as risky or more risk on. It also is true just by the dynamic of market supply and demand and the risk-free rate of borrowing cash. So the reason I bring this up is it's an interesting review of how market stages work. It's another interpretation of something we've discussed before, which is sector rotation and how market cycles versus economic cycles are not in full alignment, but they often lead and lag one another. So you are often trying to be anticipating a cycle, buying in or selling out before the market starts to actually price that in and respond accordingly. But more so than that, if we look at where we might be, it also means that if we're anticipating our next stages, once again, this is about a 4 to 5 year outlook. So don't be thinking next week this is all of a sudden going to change. This is usually 4 to 5 years for every business slash economic cycle. Then our next stage, if we are somewhere in stage one, would be to be looking at buying stocks. So the question is just where are we? And this is kind of the constant analysis of, are we early in stage one? Are we starting to see the tail end of stage one? Are we already in stage two, as the market has performed quite well over the past couple of months? But as we've noted before, we are still in a bear market channel. The technicals right now have not confirmed anything as if we are done with this downside approach. So be on caution, be on the lookout for those opportunities, start to review how these cycles work. And this can help you not only lead a move at times, but it also helps you get good pricing. This is something we did couple of months back as we were starting to actually buy products like TLT, sell, put premium, and basically anticipate the bounce. Even if it is short term, it is something that was based on these models. So with all that said, that's all the time I have today. I'll respond to questions accordingly in the chat. So stay tuned for pre-market prep. We'll talk a little bit more about this tomorrow, and I'll cover my other topic. So stay tuned. Talk to you then.
To the pre-market prep. I hope everyone's having an amazing morning. Hopefully, you guys are having had an incredible day yesterday. Let's give Jared a big thumbs up, guys, for engineering the markets every single Monday to Thursday. Good morning, Norm. How you doing today?
Hey, good morning, brother. I'm doing well. I'm feeling a little bit under the weather, but other than that, okay. So hopefully it's nothing. Hopefully I'm just a little sleepy. How are
Yeah,
you?
man. Good, man. Doing good. Doing good.
Good.
Rainy here for the last 2 days. So other than
Just
that,
started last night. It's supposed to rain
yeah,
for like the next week. So
and warm, very warm. I left my one of my heaters on and came into the room this morning. It's 55 outside, and it was just blazing. So,
that's
yeah,
warm.
yeah, yes, 55 is pretty hot.
It was like 80
Uh,
degrees yesterday.
80 degrees over there.
Yeah.
Shit, jeez. Um, Right, guys, let's get to it. Looking at some of the stuff on our gappers list this morning. Obviously, we went through, Jared kind of went through some of the market stuff. You have a lot in the red this morning with the SPY dropping big yesterday and starting a little weak this morning. Getting a little bit of a bounce now pre-market, but we'll see how that turns out in a second. So you have a lot of stocks in the red today. And we'll go through some of these and see what opportunities we can find. If we noticed yesterday we started very, very I don't want to say not weak, but slow. It was a slow start to our watch list, but it picked up
The
pretty quickly.
pre-market sucked.
The pre-market, right? Correct. It was brutal.
The market, and we kind of predicted it that it was going to be a better day than it seemed to be,
Yeah.
especially the usual suspects, or if you wanted to trade some index ETFs or whatever, were pretty decent. But overall,
Mm-hmm.
the pre-market was
It was
horrible.
brutal. I think we had two stocks that were actually somewhat decent to watch. Tesla was one of them, and maybe Neo. And here's Tesla, guys. I mean, just an incredible pre-market action, and it turned out to be really nice here at the market open. You did get a bit of a bounce there that ends up not working out. And just look at the rejection and the sell-off you had here on Tesla. So that was a good opportunity there. Beautiful support over at 176, where we kind of thought about it, right? You did get a lower low, but 176, you can see a support happening around there and a beautiful bounce to VWAP and then some. So again, very nice trade here on Tesla in the early parts of the day. Second part of the day, a little bit tougher. You still got a pretty nice range here. That's 178 to 180, right? So not bad. It's a $2 range there. But again, a little bit tougher to trade and when things are trending heavily in one direction. Here was Neo. Neo had an active pre-market activity, but the whole entire half of Neo was tough. Right about here. So it's just up and down action, big drop, which kind of kills a lot of opening range opportunities when you have a drop like this. It did settle down. Look at this beautiful play towards the highs of the day there. That was nice. Then it goes back into not trading well. So you only had a very small window on Neo that actually trended very decent here. Amazon, on the other hand, traded extremely well, guys. One of our usual suspects. Look at this beautiful rejection you're getting here, and then you have a nice clean sell-off that gets started early, goes flat for a little bit, but then continues as trending down on the moving averages, the 9 and the 20, very nicely there. Here's Apple. Apple was probably one of the cleanest shorts that we saw yesterday alongside Tesla. I think even cleaner than Tesla, really. And look at this beautiful drop there. It does come back to the VWAP and then drops some more, loses the low of the day. So this is an all-day trending trade here. If you got in early, had a some cushion here, you could have rolled this the entire day and it would have paid off very, very nice. Expert was very similar to Neo, even a little bit uglier than Neo actually. And again, only just one real window there with that big pop above the VWAP. Outside of that, didn't give you a whole lot of opportunities. But your usual suspects did do very well yesterday if you're watching those. Norm, latest and grades with the overall market as we move into this Tuesday. I mean,
So
Wednesday,
as far
excuse
as
me.
data, yeah, as far as data, we just got some revision numbers coming out. Productivity and unit labor costs came out at 8:30. Don't see anything too exciting there. And then consumer credit 3 o'clock. As we have mentioned, we've got inflationary data coming out in the next few trading days, and then the Fed FOMC meeting Tuesday, Wednesday, of course, with their policy announcement Wednesday, a week from today, and then a press conference afterwards. So that'll be the big stuff after that Tuesday CPI number, especially. That'll be the big data the market is waiting for at this point. So we peaked at 410, like on the nose on the SPY. last Thursday on December 1st, and we've pulled back a decent amount since then. So be interested. We're getting below some moving averages again on the daily. I want to see how the SPY acts this morning. If any buyers step in, it's looked pretty weak so far, but as you mentioned, we started pulling up about 20, 30 minutes ago. I'm not reading much into that. I want to see how this day plays out. I think it's going to be a pivotal day.
Sorry, I was on mute. Yeah, agree 100%. Looking forward to see how this thing is going to end up. As you see here, here's the pre-market action this morning. Norman's talking about you did get a nice push up here today. So let's see. Are we going into the green or are we going to drop further? But the daily looking very, very interesting, my friends. All right, let's dive into this gappers list. Let's remove the stuff from yesterday. Control A, Control X gets rid of that. And let's see what we have on the gap up list. We're only 3 on there. We have RXDX. This is up 100, just 177%, my friends. Not too bad. Not too shabby. This looks terrifying, by the way.
Mid-float biotech had some phase 2 study results came out. I'm looking at my notes because, yeah, as you mentioned, I don't see easily the disease that this is dealing with. But anyway, they had some biotech with some phase 2 data on a drug they have come
phase 2 up 173%.
Yeah, won't be messing with it.
What would happen when they actually find a solution for something like this, whatever they're looking to cure?
The solution for 175% move?
No, I'm saying what they have a phase 2 trial.
Ulcerative colitis. Well, I guess you won't have the shits anymore. I don't know.
But there's a phase 2. So let's say when they actually find the solution, what is the stock price going to do if we're up 175 now? I mean, it's madness.
That's the way they move. I mean, it's kind of the buy the rumor, sell the news kind of thing on these. A lot of times the big move is made when they have the breakthrough, not when the drug comes out. But as being said, pump and dump, a lot of these, we see them with these huge pops and then sell off. I won't be touching this. Yeah,
nice. Scary stuff, guys. You could tell here in the pre-market too how spready this is. 98.66 to 99.94. Scary stuff, guys. No, I'm not even gonna put this on. No, I want to entertain myself. I do want to entertain myself because I want to see what it does, but I'm not trading this, guys. Don't get confused by this nonsense. MDB this morning. This is MongoDB. We've seen this before. I remember the name. I don't think it's a great trader. They're up 25%. Only 204,000 shares traded. Doesn't look good daily, but they got a big pop, Norm. Anything good?
Yeah, this is a cloud-based database platform had earnings last night.
Okay.
Upgrades this morning.
All right, so that's moving there.
Not the best intraday trader.
Yeah, I remember the Mongo name, not the actual ticker or letters here, but yeah, this is not a great trader. So we're gonna skip on this one. How about D-Dog? So D-Dog is here next, and also, man, nothing on the gap up list is looking great today. All 3 of these are just horrible. So let's just go ahead and move down to our gap down list, which we have a ton this morning. Let's look at the top 5. Actually, really only the first one is the one that's probably not moving with the market. Everything else is Chinese tickers leading the way. Looks like here, Becky, JD, I'm not sure what well is, but XBEV, Billy, you got Airbnb in the way here, but then Baba, Lee. I mean, it's all Chinese tickers on this gap down list. For the most part. Then here you have Shopify, Tesla, OKTA, and GSK. So it's not as big as a list. Once you take out the Chinese tickers, it's not as big as a list as you would think. Let's look at PAFO, PAFO. No. This is just,
this is a SPAC.
Wow.
They had a partner that they were going to merge with, and then go public or de-SPAC, however you want to put it.
Yep.
Apparently that's on hold. That having been said, run from this.
Yeah, this is
can't run fast enough.
No, you really can't. So we'll skip on this. Let's look at Ali, OLLI, another one that's just not great, down 9.7. Ali's bargain. Oh, we've seen this ticker before. Not a great ticker. Very light on volume. 102,000 shares traded, which is not great. So yeah, let's move on down. All right, now we start getting into some of our Chinese.
This morning, by the way, but they don't trade great. So
yeah. Now we have the Chinese tickers here, guys. Let's look at the two that we like. That I like the most is Baba this morning. Got some volume. Neo, 1.5. I like the daily on Neo. You have XBEV on here. So again, you know the deal, guys, on these. Pick the ones you like the most. For me, Baba and Neo and XBEV actually tend to get the most volume, right? So this morning, I think I like Baba's daily. I like their volume right now, so I'll add them to the list. Let me see Neo, my buddy there, once in a while when he wants to do good. They got the volume, but the pre-market is crappy though. Besides the daily, that's all I really see that I like on both of these at the moment. Baba's got a better pre-market activity in my opinion. We'll put Neo as a possible. I want to see what else is on this list that might be a better opportunity. Outside of that, what's Well? Is Well a Chinese ticker as well? No,
It's a REIT. It's
this
garbage.
is-
Just
yeah,
run from.
garbage. You got JD here making some noise as well. JD could be interesting on the daily. Light volume at the moment. Airbnb is on here, and usually when these guys are making noise, there's something going on. Any news from Airbnb this morning? They're down 4.2, which seems a little bit more than what they usually do. Had a bad day yesterday, like many stocks as well. So maybe a possible today. I know you can.
Yeah, they got hit yesterday. I think this is
Yeah.
just part of that coming off. They've got some.
They
They
don't
had
have-
a downgrade this morning out of Morgan Stanley. That they
Okay.
had some issues going on yesterday. So
Yeah. Okay. The downgrade out of Morgan Stanley could be significant here. You did lose some ground yesterday. Let's see where that goes today. So possible for now because Airbnb, even though with that, we know they're not the best intraday trading stock. Shopify is also on our list, down 3% this morning. Not a great pre-market activity. And again, another one that could be tough to trade. Has gotten easier to trade at this price range than when it was higher, but still here and there they can get very choppy. Tesla
they also
definitely on
got
our
a
list.
downgrade.
Downgrade on Shopify. All right, you know what? I like the daily on it. I like the daily. That's about it. But let's see. Tesla definitely in play today, guys. 1.5 million. We got the volume. We're down 2.8 here. Looking to maybe test this 167 now if we continue to drop. I mean, we tested the 176, which was here. We're below that now, and we're continue to lose ground. Down 2.8. Great volume this morning. Maybe trying to get to this 167 area. Let's see. That's a stretch. I mean, you had a couple of down days already, so we'll need the market to be really weak to help that get there. But Tesla in play. GSK, not a great intraday taker. They had a big day yesterday, 34 to 39, and just kind of hanging out here right now, down 2.4. 1.4 million, but again, just this one, the spread and everything can be nasty at times, so be very careful. OKTA, why does this sound familiar? Maybe we looked at it a couple of
We've
days
had it
ago.
a few times in the last
Yeah,
month.
right. Okay. No volume right now, guys. It had a big gap up. It's been holding that, as you can see here, trying to stay above the 61.55. But not really in play at the moment. Again, I think we'll just have to see at the market open. Are they looking? The only play that I would like to see here is if they start losing some ground and closing this gap down here. That's about it. That would be a nice play because this is a big gap. If they cannot hold that, then you might see a nice drop at least to 57.50, where you can find some support right around here. Other than that, nothing else looks good on this ticker. So if it hits the scanners, if you guys see something, throw it back out to us. All right, that covers our list this morning, guys. Not a whole lot there besides Baba and Tesla and a bunch of Chinese tickers. Pick your favorite out of those. Norm, anything you like on your end this morning?
No, it's kind of similar to yesterday. I think
Yeah.
we'll have some good moves, but I think we're going to have to wait a little bit for them.
Yeah, I agree. You know which one I'm going to add? And maybe someone might have thrown it in the chat. I'm going to add Amazon. Amazon was real nice yesterday. I do like their daily. Already they got 876,000 shares traded. So I like this for whatever the market wants to do, up or down. I think you're in a good area where you have some support here right now. You have a place you can test if we do decide to drop, or we can bounce back up to 91, which we have done before plenty of times when we were hanging around here. So I like Amazon today. Pre-market's a little bit all over the place as far as price action, but I think that'll be a good one. All right, let's take it to the room, guys. What do you guys like today? Let's look at Buck. You're giving us Meta. Meta was active yesterday as well, right? Started getting active in the pre-market. Right now, not a whole lot going on, but it won't surprise me if this thing is going to be active. As Thor mentioned, as we get into the market open, we might get some volume here, and this one could be a good one to watch. So volume 700. Actually, it's got some volume 751. We'll have to see. Let's put Meta on here. We do have space for today. All-time low. Which one? CV Carvana. Carvana's a hit or miss unless they have news. I mean, wow. $4, 469. Man, this thing is down 30%. No, is this real action? Is there some kind of reverse? No, not reverse.
Yeah, this is yes, this is real. So we've mentioned Carvana a lot in the last several months and how much pain this company is in for various reasons. Two of their biggest creditors have signed an agreement about how to deal with it when they essentially run out of cash, which essentially is just a sign that they think that this thing is going to go belly up in the next, I think it's 3 months even. So,
wow,
yeah. Nobody.
Man. Now I don't. It's funny. This big drop like this is gonna be hard to trade. You would think this would be a good one for today,
that's why I didn't mention
but it's
it.
not. Yeah, it's not going to be good. From what we've seen, when stocks do this, there'll be a lot of volume just going sideways here.
Well, my bigger concern on that is that it's weak as hell.
Mhm.
But the short interest on CVNA, pull it up. Pull up what you got. It's got massive short interest. I've got 43%. Yeah, 44. It depends on the data source you're looking at. So when it's that high, I'm worried that people are going to step in and try to squeeze it a little bit. I don't think it's going to go up big time on a long-term basis, but I also don't want to be in a trade when I think it's weak to just short side and just get squeezed like crazy.
Yeah. This will be a tough one today, guys. I'll put it as a possible because
I don't like $4 tickers.
Yeah, the price too is very low. So it's again, we'll put it on here to see what it does. I'll be curious to see how this ends the day today, but it's going to be a tough one to trade. There's no question, especially at that price range. So Derek, I see Carvana. That's what we're looking at now. It's just not. I don't think it's going to be ideal, but let's see. Meta volume spike. Yeah, I see that 700 something thousand. So I added that to the list. That's good. Carvana is on deck. Yep, a couple of you guys throwing that out.
So Jeff, just asking a question. I think we've got a minute to be able to answer.
Yeah,
this.
we do.
He's saying, is a cash flow issue isolated or perhaps canary in the coal mine more broadly? I think this is a very company specific problem. A lot of it has to do with, I'm not saying that there aren't other people in this business that are hurt, but to this degree, they're stuck with a ton of inventory that they had to buy at very high prices in order to still have a business. If you think a year and a half ago, the shortage in cars and everything else, what happened to used car prices, they just skyrocketed.
Yeah.
Now interest rates have skyrocketed. People either can't afford or putting off big purchases like that are financed. They've spent way over what these cars are valued. They're stuck with a bunch of cars that they bought at a high price and they can't sell them at that anymore. So they're kind of hosed.
Yeah, and so many people still like working from home, a few days a week. So, for example, me and my wife, we used to have 2 cars. We only have one because, she's working from home a couple of days a week. I work from home. So it's like, yeah, this business, man, it's not good. Not good.
Well, and it's not only that. I mean, the interest rates, I don't know what, I know generally what mortgages are these days, and they've doubled or more since they were what they were a year or so ago.
Yeah.
But cars, same thing. Interest rates on cars does similar stuff. So
yeah, used car prices are insane right now. All right, what do we have here? So that's that for Carvana. Let's look at Nvidia. What's going on with Nvidia? Had a slow pre-market start yesterday. How did it do throughout the day? Very active. Nice little drop there. This morning looking much better, right? So you had a nice drop here all the way to 156, 158. You're only down 1%, but the pre-market action on this thing looks good, and I like the daily. So we'll add AMD to the list here. Light volume, 265,000 right now.
Yeah.
But that'll change. I think that's
the one thing I was going to mention. I am going to keep an eye on semiconductors today. AMAT, which is a terrible intraday trader, got an upgrade out of Loop Capital. You know, the man, Tesla's taking off right now. They upgraded AMAT. Semiconductors act in a strange way. They're very cyclical, and when the market seems like it's beat up the most, that's when semiconductors tend to turn around. I'm not saying that's happening today, but I'm keeping an eye on them.
Yeah, actually, I see NVIDIA here also popping up pretty good, and AMD making some noise as well. So yeah, I'm gonna add AMD to our secondary list as well. And there we go. Okay, excellent, guys. What else? What else we have? So that's that. How about in our YouTube chat? FCell. Not a big fan of FCell, and today, not today, especially. Just it's not in really in play, guys. This is not in play. So Slim, I'm not sure what you're looking at here. It's just not looking good as far as it being in play for some possible opportunities today. We have Well. Did we look at Well? We looked at Well. Where is
No, it's
Well?
garbage. It's a REIT.
Yeah, man. Not that we have it on our list, but that we looked at it. Yeah, it's a REIT. So here you go, Fabio. This is not looking good at all. Very, very messy. And REITs don't trade well. They're horrible intraday trading tickers for the most part. All right, guys, let's go to our community announcements.
My God, the average auto loan rate for essentially perfect credit is almost 10%.
10%. Wow. Yeah, that's not gonna help Carvana at all. Is that for
that?
That's for new
And
cars?
if you have lower credit, I mean, I guess
it,
the
20?
tier C credits around 15, 16%. That's
brutal, man.
You might as well put it on your credit card if it was the rates you had a couple years ago.
Yeah. Wow. That is nasty.
Yikes. That is a lot.
Nasty.
Get that garbage off your screen, man.
Yeah.
All right. On Morning Technology, 8 p.m. every Monday night. Tuesday is for strategy. Next week, we have Thor talking about manage the trader, not the trade. And he's going to be talking about collecting data and working with it to figure out how to know if your system's working, improve it if it's not. Then you've got strategy the following Tuesday on the 20th with John talking about resetting your trading life. And some of these are set up to get you going for the new year. So that's what that is. All right. Then on Wednesday, Psychology Tonight, you've got Dr. Kenneth Reed talking about handling pressure. And then next week, Mike will be talking about pathway to become a successful trader, how to set yourself up psychologically for that. Thursdays is for mentorship with John at 11, Thor at 8. TradingTerminal.com, our ever-evolving, growing, improving one-stop shop for all your trading information. Earnings calendar, scanners, simulator, everything you need is right there. Be sure to check that out, TradingTerminal.com. And then if you are watching on YouTube, you haven't been in the room, you'd like to check it out, you can go to BarebullTraders.com on the homepage, scroll about halfway down. On that membership chart, use the promo code PreMarket24 with that intro membership. It'll get you, it's PreMarket24, no hyphens, no spaces, PreMarket, and then 2 and a 4, just the numbers. Discount off the intro membership, which is a one-time payment of $24 for 7 calendar days, 5 trading days in the room. And we just launched our holiday Christmas promotion, half off the Elite annual membership and a free one-on-one coaching session with Dr. Reed. And yes, guys, I hate to say it, but we looks like we will be raising prices at the beginning of the year, so you can lock this rate in. Our vendors keep raising prices on us. We've held off as long as we can, but have to do it at the beginning of the year. So.
Yep. All right. Thank you, Norm, for that.
If you're expiring anytime soon and you'd like to re-up it, you're an elite member. If you do that, it'll just tack on 12 months.
Yep.
NVIDIA, I'm not quite sure yet.
What's up with NVIDIA?
Not the stock. The
member. Okay, gotcha. Yeah, NVIDIA, our buddy in chat here. Okay, guys, let's get to it.
That's a reasonable question. I'm not. I would answer if I actually knew, but it hasn't been defined yet. We're trying to keep it as reasonable as possible. But there's a lot of software and a lot of stuff that takes to run everything, especially with all the videos that we host and everything else. So, unfortunately, they're hitting us. So anyway,
Yep. All right, guys, let's get to our list this morning. We have BABA right now. Chris is saying Carvana was $3.75 a share in August 2021. How crazy! It's crazy. I'm telling you, this
yeah.
stock, let's go back. I mean,
Well, it's
we have a
down
little bit of time.
97%. I think just year to
Man,
date. Yeah, it's
right here.
yeah,
Yeah, I
it's
mean,
down 99% from then
look at
almost.
this drop.
It's
It's
crazy.
just wild. $4. Yeah, this it sucks for them big time. All right, guys, here is we have Baba on deck right now. We have Tesla, which is looking pretty good, very active. I have Amazon as well. I do have Amazon getting into the green. I like Amazon today. Good volume this morning. This one can go either way, guys, up or down. With added area support, which would be nice to see it go back to 92, but wait for us there, or at least 91 or so. And then, as I mentioned before, we have a possible level for a drop also. So we could play this in many ways there. We have Meta, and then we also have Nvidia in here as well. So we got a decent list, not great, but not worse than yesterday. I'll tell you that much. And if yesterday turned out to be a great day with this list, I would not be surprised if it can turn out to be an amazing day today as well. So let's go into Baba this morning. Levels here towards the top, you got plenty highs and lows of the last two trading days. The last couple of days, as we mentioned before, we've seen a nice pop here and some positive news out of China and their COVID situations and lockdown, and that kind of got things going. But obviously, the markets overall being weak over here in the last couple of days has caused a drop on some of these. 86.80 low of the pre-market, the high of the pre-market 88.92. Towards the top, as I mentioned, all set there, previous day close and all of that. Towards the bottom, I'm gonna find a level right over here. I like this one at 84.34. And then you also have this one at 80.52. Now, Baba can sell off pretty nice at times. It hasn't done that the last couple of days, though. It hasn't sold off pretty aggressive like we like to see. Even yesterday sold off and it came back up and it was a little bit more on the messier side. So let's see what happens today. The volume is there. We just need some good continuation out of that one. Tesla, on the other hand, continues to trade very, very well. If you look at the daily on Tesla, although it can be tough to hang on to one of these aggressive pullbacks that they like to do. If you look at their daily, they've been running pretty well and they're not as choppy as it can be at times. So trading really nice here this morning. Tons of volume, down 2.3, 1.8 million. Probably one of my favorite stocks this morning. 173.82, low of the pre-market there. Once you slam that down towards the bottom, you got 167.55. But also be on the lookout on this 170, right? This 170, you can find support there as well. And towards the top, you got plenty highs and lows of the last two trading days. Your pre-market highs, it's just slightly below your previous day close. You can mark it if you want, 179.33. But that previous day close line, that is where the action is, guys. If you look at that line right on there, you can see how many touches we have around that previous day close at 179.82. Again, not too far off from our pre-market high. And as you guys understand, these levels are an area, right? So this entire area here between the highs and lows and the previous day close right on there are pretty hot area for Tesla in the last couple of weeks, really. Here's Amazon as we were talking about this one. And again, just nice volume, good activity this morning, getting a nice bounce off the lows of 187.45. We are up in the green now with 1 million shares traded. So 87.45 is your low. Below that, we do have this drop down to an 85.90. It might be 86. And then above that, we have our highs and lows as well. You can mark down your pre-market high. It's going to be over at 88.88. And then above that, you have plenty of levels as far as the daily goes. So that is Amazon, guys. Love the pre-market action this morning. Meta here has 835,000. Doesn't look like it. There might be a couple of block trades on there because this pre-market activity doesn't look all that exciting. Had a nice day yesterday. Looking forward to getting more action out of this one today. I didn't watch the price action until after you guys have called it out. So let's see what it does today. 112.45, and then towards the bottom, some of the levels we had here in the past are still pretty good. 110 and 104. Again, 110, a great area of support there. And then towards the top, you have your highs and lows. I'm going to mark down this 116.02 and this level up here at 118. So two levels are towards the top there in case we do rally this morning. Here's NVIDIA. Look at NVIDIA go, guys, from the lows of the pre-market. It was 156 out of 158.82 now, hitting that 159 in the pre-market. This thing wanting to go green today. High of the pre-market at the moment is just slightly below the previous day close at 159.30. 39. We're looking to test that now as we continue to push higher here on NVIDIA. So let's see. Outside of this window, the high and the low of the pre-market towards the bottom, we do have 151.23. And then towards the top above the previous day close, there's this area right on here just before the highs and lows of the last two trading days, right? Here you have your highs and lows of the last two trading days. This 162.62 is a lot of touches on that thing. There are a couple of days opening and closing around that area. So I think that level is worth noting down here on NVIDIA. If we do decide to get a nice push above the previous day close here, that can be a nice target area if we can. So that's our list, guys. Baba, Tesla, Amazon, Meta, and NVIDIA. And Andrew F is asking about RX, DX. Yeah, I have this thing here. This thing is messy. It's messy. I actually just put it on here just for entertainment purposes. I want to see it go back down to $2. But it's messy, man. I mean, this thing opened up here, went up all the way to 132.90, and now it's just slamming back down. The spread is horrible. The volume is dying down, as you see here. Just be very, very careful. I mean, this thing literally can drop $10 like nothing, and there's no volatility hold, so you don't get a break on this thing if you jump on this. So, guys, this is as dangerous as it gets. Again, I have it here just for entertainment purposes only. I want to see this madness play out here. But you see this action here? People are actually trading this thing. So, man, oh man, careful. Yeah, it's scary. That ticker is very scary, dangerous. I mean, you just, how do you trade this? How do you trade this? How do you manage your risk on something like this? Maybe taking 2 shares only. That's probably the only way you trade this. Take 2 shares. Okay, what else we got? What else we have over here, our friends, over in our chat? And buy and pray. Cuba says buy and pray. Yeah, that is probably the best strategy you can take on this. Buy and pray that pray and hope is going to go in your direction. Okay, good. Baba's good. GSK. We looked at GSK, right? I'm not a big fan of it, of the way it usually trades. How did it do yesterday as far as see, look at this. What is this? What is this nonsense that we're doing here on GSK? So nothing happened. Maybe some news broke out, right? We shot up over here and then just kind of went sideways. I'm not sure what the news is, but again, this ticker, guys, is one of those that doesn't trade very well. So I usually keep it off my list. Even on a day like today where they have 1.4 million and they're down 2%. The history on this thing is just not great. Is it foreign? It looks foreign here, especially. And this day looks horrible. It looks very foreign. What do these guys do? GSK. GSK. I'm not sure what they do. PLC. Let's take a look here. We got some time. 9:06. The power company. I don't know what power company looks like. Finding new ways to treat, prevent. Oh no, it's a pharmaceutical company to prevent HIV. If I got the right company, GSK. That's a very okay. So it's a pharmaceutical company. Discover what we're getting. Yeah, that's what it is. Scary stuff, man. Scary stuff. Very, very careful with that thing. So it's not foreign. It's in North Carolina. Mighty Mouse. Okay. Yeah, careful, man. It looks like they have something that broke out yesterday. You can see the pop here, but just intraday on this thing could be brutal. Ethan, yeah, I mean, you can have your equalize risk hotkeys, but that only really plays out well in the market open. Remember, in the pre-market, you're not going to get that opportunity, right, to have those stops set up like that. after the market open, yes, you can. So if you're looking to trade like an RXDX, that's going to help, having hard stops in the system. But before you even get to that point, what is your strategy? What is your strategy here? I mean, now there's not to really look at. It's just messy. What is your strategy? What kind of play you looking to take here? An ORB, you have to wait for the setup. The strategy is going to come first, and usually these tickers, unless you're a master scalper, you can get hurt pretty quickly. So be very careful. Why are scanners so empty in the last days? The pre-market, for example, like today, if you look at the scanners, the question is why the scanners so empty. Here's a lot of Chinese tickers, right? So if you take out the Chinese tickers that are on here, this list is actually pretty small because you got a ton. You got Neo, Baba, Billy, Lee. You guys know the names, right? You take that out, this list is going to be very small. I just think there's a lot of companies just kind of, just hanging out, waiting for the spies to kind of decide what it wants to do. There's no independent news in a lot of these tickers. They're just moving with the SPY. Tesla is the only one that I really see that's got some good volume that you're getting a lot of movement on. But they got just so much going on their side of things. So outside of that, unless you have any news or individual catalysts, you're not going to get a whole lot of movement, right? So now I'll tell you that next week, that's all going to change when the Fed starts doing their thing. We're going to have some movement next week, good or bad. Things are going to move, right? We need catalysts. We need some kind of activity. We haven't seen any of that in the last couple of days, and we're not in earnings season, at least not with the big names. A couple of companies reporting, but the big names are not reporting. That's another thing that creates a lot of momentum and volatility. So yeah, this list is going to be small pre-market, but you guys know you got your scanners as far as stuff that's moving with volume. So pay attention to those. You might spot something that might not be on your list that you can take advantage of, right? Apple was great yesterday, actually. Apple was really, really clean. And it hasn't been for the most part. If you look at the last couple of weeks, I think uh, at least a couple more days than not, it has been on the choppier side, I think. But yesterday was very clean. So this morning we got some great volume. We're down 1.1 on Apple. Yeah, I'll put this on my list. If they trade like they did yesterday, they can give us some really good opportunity. So yeah, I think they're worth having here. They got some good volume this morning. Um, Again, our list really, if you look at it, guys, since there's not a whole lot going on as far as independent news with some of these tickers, and some of the stuff that does have news looks horrible, like Carvana. I mean, just that's horrible. Airbnb also downgrade. Actually, Airbnb is not too bad. It's not too bad on the daily. Look at this drop here. This might be actually a good one. I'm gonna take off one of our usual suspects, which again, if you look from here down, besides Baba, which Baba is our usual foreign suspect, right? Baba is that's what that Baba is. But Tesla, Amazon, Meta, Nvidia, and Apple, these are all kind of falling into our usual suspects. Meta not so much as the other four, right? Here, 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 and here. And usually when you have a list and your usual suspects are leading the way here, that means it's just not a lot of independent news. You're just kind of trading what the overall market is doing, right? And that's okay too. That could be a great catalyst. So at the market open, that can change, and some of these tickers might give you an opportunity, but at least you have a starting point. But look at Airbnb, guys. This could be something here. Let's see, who can we take off? Let's demotivate someone here. Um, let's see, demo. Who we're gonna put down here? Nvidia. No, Nvidia is good. Meta is good. Amazon is, I don't know. You know what? Let's just leave it the way it is. Let's not touch it because I don't see anything. I'm looking at that list. I don't see which one we can move down to make room for Airbnb. These look pretty good up there. Audio issues. Is the audio okay? Let me know. We'll reset the bridge. We only got a couple of minutes left, but we can reset the bridge for when Brian and the audio bridge in our
Everybody's
chat.
saying it's good. Somebody said it was
Oh,
bad.
okay. Yeah, somebody said they have having issues, but it looks like that's just that person. Okay. All right, guys, we are all set here. Moderator's list is coming in pretty nice. We'll wait for Brian to throw out his list, and we'll call it a morning here. We got Thor, Susan, Eamon, and Peter's putting his stuff together now. So excellent. Um, what do you think about trading futures? I don't trade futures, Joel, so I'm not sure. You know, I'm not a. It all depends on what you're into, right? So I don't trade futures. I can't give you what I think about that. Um, all right, Artie's in the chat room.
Already.
Good morning, Artie. Let's get this bread this morning. Absolutely. Artie, where are you? Are you in Europe? Are you in Vancouver?
He's back
What's
in
your location?
Vancouver.
Oh, he's back. Nice,
I think
nice.
so.
All right, excellent, guys. Let's get this moderate list here together. Let's bring this over, guys. If you haven't done so already, hit that thumbs up over on YouTube. We appreciate it very much. We'd love to be to 200. We haven't been above 200 in a while. We're like 189 and 176. You know, hopefully, it's Wednesday. Hopefully by Friday, I want to get at least one day above 200. Make me feel good. It's been pretty tough to get above 200, man. All right, let's get here. Let's get our list here. Let's see what our moderators are watching this morning. So we'll bring this over, and if it will come over, there we go. Excellent. And I will get this over here. Ah, jet lag. Okay, yeah, I got you already. All right, guys, here we are. Thor, XBEV, Tesla, SPY, Meta, and the Pivot Alert Bot. We have Susan looking at Tesla, Amazon, Netflix. Thor is adding Baba to his list, which I like today as well. Looking pretty good there. Eamon, mRNA and potential long, potential short. He's looking at Lucid. Peter will be looking at no, I'm sorry, this is IPO report. Raya, possible IPO for today. Megan looking at Shopify, Roku. Peter, we're looking at AMD, Apple, Tesla, secondary list, Baba, Meta, and a BA for Peter this morning. So there you have it, friends. That is our list so far. We'll see if Brian can come in and throw his list on there as well. Yeah, NVIDIA, I'm only kidding. I mean, the numbers are what they are. If we did this for the numbers, you know, we probably wouldn't do it. We do it because we love this stuff, man. You don't wake up this early and go through this whole process unless you enjoy what you're doing. And me and Norm been doing this for quite a while. It has
Almost
become
4 years.
4 years, man. It has become part of our routine. We were talking about this in the onboarding class yesterday. You know, when I go on vacation after a couple of days, I start checking in to see, okay, what's going on, because it's part of your process, you know. So yeah, the numbers are what they are. I mean, they help to reach other potential people and kind of join the show and be part of the progress and helping people is you don't understand it until you start doing it. When you start helping people and mentoring and there's a fulfillment you get from doing that trading does not provide for you. And we talked about that in our onboarding class yesterday. So this is why when you see these millionaires and rich people like taking the time to write a book, like why would you go through that whole process? It's a pain in the behind, but it's the fulfillment you get from helping others that is really neat. So yeah, absolutely.
It's true.
All right, been with BBT since 2016. Nice, man. Nice.
OG.
Yeah. Were we Vancouver traders at that time? I think we were Vancouver
Yes.
traders at that time. That's when I joined. We were Vancouver traders. Here it is, guys. Brian with his list: Tesla, Meta, RXD, SPY, and the Qs. Now, Brian will be trading with the chat room live with Andrew. Guys, trade safe over on YouTube. Take care. Join the chat, guys. PreMarket 24 gets you in there for 7 days. You could really get a feel for what the community is like. We'd love to have you. And then we have an onboarding class on Monday live with myself and Mike. And we go through a lot of topics like the one we just mentioned, right? Aside from just showing you the community, we dive into a whole bunch of other stuff as well as we answer your questions. So take care, trade safe. Happy Wednesday. We will see you guys tomorrow at 8 a.m. with Engineering the Markets.
Take care, guys. Trade safe.